Okay, welcome back, everybody. Today's Friday, January 17th. Today we're going to be continuing on with Chapter 1. We'll be wrapping Chapter 1 up today. Just wanted to point out that we do not have class on Monday because of observance of MLK Day. So no class on Monday, so we'll get back together again on Wednesday of next week, and we'll be starting Chapter 2 on Wednesday of next week. Also, just wanted to remind everybody about getting into Connect and getting those assignments started. Remember that Chapter 1 Connect assignments are not due until next Sunday at 11:59 p.m. It's just to remind everybody about that there. Does anyone have any questions or anything before we get started on it?
You mentioned something about the PowerPoints and needing to put in a password. I tried it this morning.
And it is blocked by password?
Yeah.
Okay, well, let me thank you for letting me know. I thought this was the class that was an issue with, so hopefully I'll have that fixed by the end of the day or by the end of tomorrow. Let me just figure out what's going on with that, and I'll make sure that you get in there. Okay. So we left off with GASB concept statement number 6 yesterday. That was dealing with how to measure assets and liabilities, whether at fair value or historical costs. Today we're going to move on and be picking up with how GASB's objectives differ from business objectives. Obviously, there's going to be more emphasis on the budget. We talked a little bit on Wednesday on the importance of the budget with governmental and not-for-profit accounting as opposed to the business sector. Legal compliance. If you recall that the budget a lot of times carries the weight of law, most of the time, more times than not. So legal compliance is going to be very important because we're using the general public's funds that we take from involuntary contributions with taxes and other means. So legal compliance is going to be highly emphasized. Efficiency and effectiveness measures other than net income. I know we spoke briefly on that Wednesday as well. Net income is not the most important measure as it is in the business sector of accounting. Here on governmental not-for-profit side, we want to look at the non-financial effectiveness measures as well, like if parks are being maintained and stuff of that sort. GASB concept statement number 2 explains that non-financial measures other than dollars are required to assess effectiveness. So we already know that, so that's good. Okay, this slide right here is pretty important. This is going to show you the breakdown of the different financial reports for different parts of the state and local governments. You can see at the very top here we have the management discussion and analysis, which is known as MD&A. I don't know if you heard of the management discussion and analysis from your business sector classes. So that's the MD&A section there, which just pretty much is management's discussion and analysis. Pretty much the name gives it of where the, in this case, the government is at or the municipality is at, and what their thoughts are with the status quo or the current state of affairs within that government and where it's going prospectively or moving forward from that point forward. So that's a little bit of stuff we can expect to see in the MD&A section. Then we have the basic financial statements. As you can see here up at the top, we have the government-wide financial statements. So that's going to be, there's 2 sets of them. It's going to be the government-wide statement of net position, and that's going to be similar to that of a balance sheet. So statement of net position, we know that's what the balance sheet ultimately measures, is the net position at a given point in time of a company. So that's what the statement of net position is going to resemble. And the government-wide statement of activities is going to be the second government-wide financial statement, and that is going to be similar to that of the income statement, the for-profit business sector of accounting. So those are your 2 government-wide financial statements. Next, we'll get into the fund basis financial statements. If you recall, I said that there's a lot of funds in governmental accounting. It's one of the big differences. So for the fund basis financial statements, remember that we have three types of funds. We have governmental type funds. There's 5 in there. Proprietary funds, there's 2. And fiduciary funds, there's 4. For the governmental type funds, first we have a balance sheet. So everyone's familiar with a balance sheet, what's on their assets, liabilities, equity. Next, we have the statement of revenues, expenditures, and changes in fund balances. And notice here how I said expenditures, not expenses. We'll get into the differences of what those actually are. Expenditures measures outflows and when the liability is incurred in a fund, as opposed to an actual expense. But this statement is going to be similar to that of an income statement as well. So we have the balance sheet and the statement of revenues, expenditures, changes in fund balances. So obviously, because we're working in funds here. And then the next is going to be only when at the end when we convert it. You'll see when we get later in the semester, this is a reconciliation of governmental statements to government-wide statements. That's not actually one of the statements that are within it, but it's still going to be a financial report because the governmental type funds operate on a different basis of accounting than that of the government-wide, so we have to convert it on a worksheet, and we'll get into that later in the semester, but that's why it's one of the financial reports under the governmental type funds because they're recorded under a different measurement basis or accounting basis than the other funds. So that's your governmental funds, pretty much balance sheet, and think of it as the income statement and then the reconciliation. Next, the proprietary funds, which is we know business type funds. There's going to be 2 funds there, but the relative financial reports that accompany the proprietary funds is going to be the statement of net position, which once again is like a balance sheet. Next, we have the statement of revenues, expenses, and changes in fund net position. And notice here that it's expenses as opposed to expenditures. That's a kind of a telltale to it being on a different accrual or a basis of accounting there. And then lastly, they have the statement of cash flows. So that's going to be a lot more like you're used to seeing proprietary funds because these actually operate on the full accrual basis of accounting. And we'll get more into these measurement focuses. There's only 2 different types, the accrual and modified accrual. We'll touch on that a little bit later on in the chapter today. So pretty much your proprietary funds, statement of net position, aka balance sheet, statement of revenues, expenses, change in the fund net position, same as an income statement in your statement of cash flows. And I know you're probably familiar with the statement of cash flows from your business classes or your business type classes. There is a different component. We'll get into that. This has 4 sections as opposed to 3 sections. How the for-profit sector has your operating, investing, and financing sections. This has 4 sections as opposed to 3. So just a little move, just dropping that in your ear for moving forward. So that's your financial reports for your proprietary funds. Lastly, the fiduciary funds. We have 2. We have the statement of fiduciary net position, and then the statement of changes in fiduciary net position. So only 2 there, pretty easy there. After that, we have the notes to the financial statement. That's a component that we're used to seeing in financial statements from our other sector of accounting. So the notes, and then the third component of the financial reports is that of the required supplementary information, other than that of the MD&A. So we have certain required supplementary information other than the notes that we have to have in there, and obviously other than the MD&A. There can also be other supplementary information, but that's by choice. It's not required by GASB standards or FASB. So any questions on the outlay of these right here? Decent. And I will shoot you an email as soon as I fix the PowerPoint issue. So I do apologize about that. But I will get that fixed and let you know as soon as possible. So there's that. Next. So we're going to kind of moving forward from here, and the rest of this class is dealing with these statements for the most part, and then the different types of funds that are going to be used, and that's for the most part what the rest of the chapter is. So a little more on the overview of basic financial statements. For the government-wide, like I said before, we have the statement of net position. As you see here, it says it's similar to business balance sheet. And then the second one is a statement of activities, similar to business income statement. So for government-wide statements, that's it, just two. The government-wide statement of net position and the statement of activities. Just remember balance sheet, income statement. We know those are the two main ones: balance sheet, income statement. So for government-wide, statement of net position, statement of activities. Fund financial statements is going to be detailed reports of governmental, proprietary, and fiduciary activities. So pretty much we have the government-wide level and then the fund level. Okay, that's our two different levels here. So here's our three different levels, our three different sectors of the 11 funds. We have the governmental, which is general citizen services, and that's going to have a balance sheet and a statement of revenues, expenditures, and changes in fund balance. Your proprietary, which is your business-like activities, which is stuff like your water companies, power companies, stuff of that sort. That's going to have a statement of net position. Recall that's like the balance sheet. The statement of revenues, expenses, changes in fund net position, and statement of cash flows. And then fiduciary, holding money in trust for others. Statement of fiduciary net position, statement of changes in fiduciary net position. I know this is kind of redundant. We just had this on the other slide. It's just kind of just repeating it, giving you a good feel for it. So reporting perspectives. Internal accounting still tends to emphasize on individual funds, the pools of money. So we really are going to be focused on these individual funds to make sure that the resources are segregated as they should be and allocated as they should be. The government-wide reports are going to be an attempt to make the reports a little more friendly to the users, to what they're used to seeing. So the government-wide reports are going to be the accrual basis, so it's going to look more like what we're used to seeing from your other classes of accounting. So that's pretty much what their attempt is in having these government-wide reports, so users are a little more familiar with them, and it does a better job of showing the position of the government as a whole, as opposed to just individual funds. So it's easier to just see it as a whole. So now we're going to get into the different bases of accounting here. We have the accrual basis and the modified accrual basis. First, we'll start with the accrual basis. This is what you're used to seeing in your intermediate and your principles. This is also known as the economic resource measurement focus. So if you hear the accrual basis or the economic resource measurement focus, no, it's one and the same, okay? General business concepts of revenue and expense are going to apply with exchange-like transactions. So that's just exactly what you're used to seeing. No differences there. On the modified accrual basis, which is going to be known as the current financial resource measurement focus, this is going to apply to funds that are financed by taxes and other involuntary contributions. I do think the modified accrual is a little more simple than that of the accrual basis. That's kind of one of the reasons I like governmental, but it does get a little confusing at times, but there's just a little bit of differences, but it's a little bit easier to grasp, but it can be confusing jumping back from one to the other. So, but we'll get into that and make sure we know we're using the correct basis of accounting or measurement focus for whatever the funds are on. It's not that bad. I know it sounds probably overwhelming right now. There's a lot coming at you, but it's not too bad. So the modified accrual basis, revenues are going to be recorded when measurable and available. So notice that's a little bit different than when they're on the actual accrue basis, when they're actually earned. So these are when they're measurable and available. Because remember, a lot of this comes from involuntary contributions. So a good example is going to be property tax revenues are going to be recorded as revenues if they're collected during the year or soon enough after to pay the current year's obligations or liabilities. And I believe it's either a period of 30 or 60 days. I want to say it's 60 days after the end of the year, but we'll get into that later on in the course. Outflows are going to be called expenditures. Expenditures are going to be recorded into the fund when a liability is incurred. So once again, the outflows are known as expenditures. biggest thing here is to know that the revenues are recognized or recorded when measurable and available. So what exactly is a fund? We use it as a term for the governmental accounting. So a fund is going to represent a part of the activities of some of an organization. It's an accounting entity, so it's a self-balancing set of accounts reflecting the assets, liabilities, net assets, and changes in those assets. So by self-balancing, what I mean is if there's a debit, there has to be a credit. So your debits have to equal credits. That's what the self-balancing means. You can't make an entry on one fund, like a debit in say your general fund, and then a credit in a capital projects fund. There has to be a debit and a credit for each one of those funds, because you'll see that a lot of times we'll transfer to and from a fund, but there has to be a receivables and payables are due to. So you just have to make sure. That's what it means by self-balancing. There has to be a debit and a credit entry in each fund. That's why it's known as its own accounting entity. Segregates resources for specific activities, and this is in such a way to ensure compliance with appropriate regulations or restrictions. So that's why we're actually putting certain funds in place for different types of activities to make sure that those funds are segregated. So that's pretty much what a fund is. Just pretty much you have to have your own general ledger. You start a new general ledger for that fund, and obviously the general ledger is going to ultimately build the statements for that fund. So that's pretty much all that means. You just have to have your own general ledger to record your debits and credits, and that's going to create its own fund. So now state and local government fund types. Governmental type is going to be used for activities that are largely unique to the government environment and do not fall into either the proprietary or fiduciary categories. Obviously, the proprietary type is going to be your business type activities, and your fiduciary activities or fiduciary type funds are going to be acting as an agent or a trustee for a third party. So next we'll get into the actual governmental type funds. There's, as I said before, there's five of these funds. The first is a permanent fund. Permanent funds are going to account for and report resources that are restricted to the extent that only the earning and not the principal may be used for the purpose that support the reporting government's programs. So as we get into these funds, think of the name of the funds, okay? The name is going to really tell you a lot about the fund and why it's being used. So permanent funds, the corpus or the principal can never be touched. If that's permanently, and it's permanently there. The only thing that can be used is earnings for whatever the permanent fund is for, okay? So it could be, a donor could make a pledge and say, hey, I'm going to make $100,000 donation, but the corpus of my donation, that $100,000 of the principal has to stay intact, but the earnings can be used to have scholarships for these types of students, and that's what that type of fund would be. So if that type of donation is made by a donor, and he states that the principal can't be touched, only the earnings, the government would use a permanent fund to account for that resource. Does that make sense? So permanent fund, it's permanent. The principal can't be touched. It's permanently there. Only earnings is what's used. Capital projects funds. What do you think would be accounted for in that?
Capital projects, I guess, investing into capital and buildings and machinery.
Right. Infrastructure. Right. So highways, bridges, buildings, like sewer lines, stuff of that sort, big capital projects, they're going to account for those funds within a capital projects fund. Makes sense? Capital projects, put it in the capital projects fund. Permanent, if it can't be touched, put it in the permanent fund. So you're good on those two? Mm-hmm. See how the names can really tell you a lot about what it's for? Okay, another type of governmental fund is a debt service fund. What do you think this would be used for? It's used just for the only purpose of paying debt of the government. It's to pay. It's going to be resources that are restricted or committed or assigned to the expenditure for principal and interest, other than interest or principal on proprietary or fiduciary activities. So it could be in another activity, but if it's a governmental activity and we have debt, like say we have a bond payable for 10 years. then the money's going to be put in that debt service fund to make payments on that debt. So we have those funds earmarked just specifically for the purpose of paying off principal and interest on long-term debt. So it makes sense, right? Debt service. So that's that. Special revenue funds. These account for and report the proceeds of specific revenue sources that are restricted or committed, but not merely assigned. And we'll get into the restricted, committed, assigned, and all that stuff later on in the chapter. And you'll see that's just the level of restriction on a fund. Different levels have some you can't touch. If they're like restricted, you can't touch them. If they're just assigned, you can reassign them if you want within the government. So we'll get into that later, just so you know what I'm talking about here within the description of the actual fund itself. So this pretty much special revenue fund is going to be any funds raised that are going to be restricted or committed to like a special purpose, anything other than that of debt service or capital projects. So pretty much if say we want to, if there's something that someone wants to do, like within a certain region or a certain area of a city, like say a certain area wants to make like a dog park or something like that, then they're going to put that in a special revenue fund for a dog park, or start to do a city park, or something of that nature, something other than a capital project like a major infrastructure project, or other than paying debt, then it would go in special revenue. And it could be, you could have numerous special revenue funds, all the governmental funds you have numerous of them other than the general. We'll get into that. But special revenue funds for anything other than like a capital projects or debt, put it in special revenue. The general fund, this is going to account for most of the basic services provided by the government. Technically accounts for and reports all financial resources that are not listed in other or accounted for in other funds. So your general fund is pretty much your operational fund. If say the city of Bluefield, out of their general fund, if they're going to buy new police cars, or if they're going to purchase supplies, they're going to do it out of the general fund. The general fund can make transfers to other funds. So if we know we're going to have some long-term debt that needs paid, we can transfer money to the debt service fund, and that you can move monies to and from different funds that way. But your general fund pretty much is your catch-all. If it doesn't belong in another fund, if you can't find a place to put it in the general fund. The general fund does have a budget. The general fund and capital projects fund, or I believe capital projects, it might be special revenue. I'll get into it. I'm getting ahead of myself. Has a budget to it, and those are actually set, and then they're obviously law the way the law carries that. So those are general fund. So those are the 5 governmental funds. You're pretty good on them. That makes sense.
Yeah.
Just go with the name. Okay, next we'll get into our 2 proprietary fund types. First is the enterprise fund, and this fund pretty much is used for them on a for-profit basis, the government providing services to people outside of the government, not within the government. The enterprise fund is a business-like fund, and it's going to be operated either on a cost recovery or profitable basis, usually on a profitable basis for the enterprise. And that is going to be to service people outside. So like, for example, the water company, they're servicing the general public, right? And then we pay them a fee. So that's just an example of an activity that would be accounted for under an enterprise fund. The other proprietary fund is pretty much the exact same thing, but it's to provide services within the government. And this is going to be done on a cost recovery basis. So that hence the name, internal service. So it's servicing the actual governmental units within that government. That's the only difference between the 2. They're both business-like, but one is going to be a cost recovery basis because it's internally servicing the government. The enterprise is more just broad. It's people outside the government, and that's usually for profit, but it can be on a cost recovery. So that's your 2 proprietaries, and that's the main difference between the 2. One services the government, one services just the general population. When we get into actually reconciling, or when we translate into government-wide statements, the internal service fund is going to be accounted as a governmental activity, so it'll be included with your 5 governmental funds. Why do you think that's so?
Well, because it's within the government.
But it's servicing the government. So the activities that it's being accounted for is strictly pertaining to the government. So when we do the governmental activities, because it's either going to be business-like activities or governmental activities, it's easy to confuse that. But just know the internal service fund, since it services the internal scope of the government, that is going to be included in business-like activities, governmental activities, even though it falls under business-like funds. Okay, so there's the change there. Good on the proprietaries. Okay, next is the 4 fiduciary funds. First, we have the investment trust fund. This is going to account for the external portion of investment pools that are governed by a trust agreement in which the sponsoring government acts as a trustee. So pretty much what that means, say if the city of Bluefield, or we'll say the city of Bluefield, they determine, they get up with like Beckley and just different parts, Charleston, different areas of the state, and they decide they're going to start pulling funds together. Say Bluefield's had the idea, so they're going to be the sponsor. So they'll set up an investment trust fund, and for all the other municipalities that put money in that fund, that's where all their monies are going to be held, because it's an investment trust fund, and the government's just sponsoring it. So if this is our government and we have an investment trust fund, that means we're sponsoring some type of a fund for other governmental units as well that are included, but we're the sponsors, so we're going to have to hold that. But it's for a fiduciary capacity because it's not our money, right? But the money that we invest is not held. They're just the outside money that doesn't belong to the government, that's being held for a third party. Next, pension fund. Pretty much pension funds hold assets, and the assets earnings are used to pay for pensions and for the retired employees of the government. Pretty much is all that pension fund is. So there's assets being held. The earnings are used to pay the retirement of retired government employees. Next is a private purpose trust fund. This reports all other trust arrangements under which principal and income benefit individuals, private organizations, or other governments. So a little bit different there between the investment trust fund. This one is going to benefit the individuals, private organizations, or other governments. And then the last is going to be custodial funds. And these account for all other fiduciary activities that fall outside of those other 3 funds, and even including activities where there's not even a trust agreement. So that's just pretty much to catch on in the fiduciary column if it doesn't belong in any other ones, or if there's no trust agreement, it goes in that one. Excuse me. You okay on the 4 fiduciary? And so those are the main funds. Those are the funds we use, all 11 of them. Pretty straightforward. I know there's a lot of them. Try to get familiar with them now and get familiar with what statements go with each of them, because that'll really, really, really put you ahead of the game moving forward in this class. I mean, it really will. So that's really important. So now that we're talking about funds, how many funds are needed within a government? Well, there's really no answer. The only true answer for that is the general fund. You have to have a general fund, and you can only have one. So every government, no matter what, if you look at their financial statements or you look at their books, they're going to have a general fund. And they're not going to have any more than just one. And remember, that's just the main operational account. That's where all other resources and everything are accounted for if it doesn't fall within another fund. And that's where all purchasing and all the activity of the government comes out of. You might not need one of every types of funds. Like it says here, if you don't have any long-term debt, then you obviously don't need a debt service fund, because that's for the purpose of strictly paying principal and interest on long-term debt. You might have more than one type of funds. Like if it says here, if you have more than one building being built, then you might have 4 capital project funds. You could combine them. Really, it's a judgment call, whoever's doing the accounting. It says here, obviously on judgment, but it says that you use the minimum amount possible that allows you to get by through whatever the law states you have to have. So really, the only answer for that is you have to have a general fund, and it can't be duplicated. Only one general fund. Other is an as-needed basis, or whatever works best, however you want to tailor the government. Okay, importance of the budget in governmental accounting. Every government should adopt an annual budget, obviously. The accounting system should make it possible to compare actual and budgeted results. So the budget versus actual comparisons. This is actually something that's going to be included in the RSI, which is the required supplementary information. And that's going to be for the general fund and special revenue funds for which an annual budget is adopted. So those are the only two funds in which you have to worry about a budget being placed, is in one of those two. And if the budget isn't placed, just remember that one of the disclosures, you have to have the actual versus the actual projected budget, the budget versus actual comparisons within those RSI for the general and the special revenue. Okay, next, the Comprehensive Annual Financial Report. That's known as the CAFR. I like to refer to it as the CAFRE instead of just saying Comprehensive Annual Financial Report, so I just say the CAFRE. So that's going to contain the financial report of the government. The components of the CAFRE we're going to be getting into in Chapter 2. Chapter 2 is probably my least favorite chapter of this book because it's kind of just giving you just an example of each one of the statements that we just went over, and it's going over. It's an important chapter because it kind of gives you an idea of where we're going before we start the beginning on how we're going to get there. So it's a nice little overview. The main things to take away from this chapter, obviously, the measurement focuses, the difference between the two. That is the current financial resource measurement focus, which is going to be the modified accrual, and then the actual economic resource measurement focus, which is your accrual based, your 11 funds, the different categories they belong in, governmental type activities, proprietary, fiduciary, and then be familiar with the concept statements. I'm not going to really dig super deep in those. We'll see a little bit on it on the test, but not really deep. My main thing here is the different measurement bases, the funds, and then also the statements that accompany each of those funds. That, in my opinion, that's the most important thing from this chapter. One thing also I do want to mention about the governmental funds, where it's on a modified accrual basis of accounting, the current financial resource measurement focus. What that means, the measurement focus, what that really means is what items are actually being measured. So on the current financial measurement focus, resource measurement focus, there's no long-term anything in there. If it's not current, it's not listed. So there will be no long-term debt listed in any of the governmental funds on the balance sheet or any of that stuff. It's all going to be current. And we'll get into that a little bit as we move forward. I just wanted to point that out now. The slides, I will figure out what's going on, hopefully by today. If not by tomorrow, just be on the lookout for an email. And I do apologize for that, for not having them available. I don't know what's going on with it. And then, what else? Just remember to connect. I don't know if you've been able to get into Connect or not and see that stuff. I haven't checked in to see if anyone has or not. But just try to get into Connect. And I believe there is a smart book and a homework and a quiz. Maybe there's only 3 assignments for each one. The quiz is only 10 questions. I think it's 10 questions, 10 minutes. And then I think that the homeworks are realistic too. They're like 7 problems, I want to say, within each thing. It's not bad. It shouldn't be too burdensome or anything. But that's all I have for today. That finishes chapter 1. I hope it's making sense to you. Do you have any questions on anything that we've covered?
No, I think I'm good.
You think you're all right? Yep. And like I said, just try it. Like I said, no class Monday, obviously. We'll meet again Wednesday and start chapter 2. But hopefully we'll be able to finish chapter 2. We might have to carry on a little bit into the following week. It might take 3 class periods. It probably will. We probably take 3 class periods to cover that. But we'll start chapter 2 Wednesday and just try to get started on Connect. I'll email you with the PowerPoint issue and just really try to just if you get a grasp on the first two chapters, your life's gonna be a lot easier through the semester. So really, if you put that time in up front, I'm telling you, it will, in this subject, it will really make a difference if you become really familiar with the funds and the measurement focuses and what statements apply. From that, really, it's just then it's just getting the details really down. Like if you have the overview of what's going on, I'm telling you, it just makes a lot more sense in this course. So that's it, and I hope you have a good day, good weekend. I appreciate you coming to class. And if you have questions, shoot me an email. I'll get back with you as soon as I can, and usually within 24 hours. And like I said, I look forward to working with you this semester. I think we'll have a good time. We'll work hard and have good results, and I think you'll like the course. It's a little different looking than the other accounting courses out started out already. Yeah, it is. It's different, but it's a nice little change of pace. So.